Good afternoon, ladies and gentlemen. It's quite a special atmosphere in the chapel room here at the Abbaye de Neumünster. I think this is the first time for me either speaking or moderating in a former place of worship. So this is going to be a very interesting panel, but if your mind does wander, please do admire the ceiling. Thank you very much for choosing this session. We're delighted to have you with us. We're also delighted to have those of you online who are following us, following this streamed event. Thank you for joining us, online audience as well. This one-hour panel will focus on the role of microfinance in strengthening food security in East Africa. My name is Jane Feehan. I'm a senior advisor on environment at the European Investment Bank over on the other side of town. Some of you have maybe visited the EIB or will have the pleasure to go there this evening for the awards ceremony. And I have the pleasure, the honor to serve as moderator for this event this afternoon. Now, before we get started, ladies and gentlemen, I'd like to show you a short video to illustrate a little bit about what the EIB is doing in the area of microfinance in Africa. So I'm just going to go to that now. There we go.
Je m'appelle Kwadjo Maxime Ato. J'ai ma mercerie que je gère moi-même. Je vends des articles des couturiers. Je mets des boutons qu'on appelle pression sur des habits des clients. C'est une machine à suffiler. Et là, c'est une machine à mettre les pressions, boutons à pression. L'idée m'est venue en 2016. Aujourd'hui, je pense que ça fait un bon moment et un petit bout de temps, mais c'est pas mauvais. Sans les prêts, j'étais en famille, la grande famille. Avec les prêts, je suis dans ma famille, moi-même ma petite famille. Voilà, donc la différence est déjà là. Sans les prêts, je ne pense pas que ça peut aller. Mais avec les prêts, par la grâce de Dieu, tout va bien. Je m'appelle...
Thank you very much. I lived in Abidjan until recently, so I have to say that makes me a little nostalgic for my time in that lovely city. So this panel then is going to focus on the food security situation in East Africa, in the East African region, and provide concrete experiences from Centenary Bank in working with smallholder farmers and agri-food businesses. The panelists are going to address the role of financial inclusion in supporting food security and the challenges that financial service providers face. Now, before we get into it, and before I have the honor to introduce the panelists to you, I would like to just take a moment to build a bridge, if you like, between the very valuable plenary session that we had before lunch on inclusive finance for food security and nutrition, and to touch on a couple of points in Maike Reinisch's presentation, which characterized food security, just touch on a couple of points there, and then show how this panel is going to build on that and focus that down to a particular region and specific solutions and one institution in particular. So during that earlier session, we looked at the four different dimensions of food security. So we have the dimension of availability, the dimension of access, stability, and the dimension of utilization, those four very different aspects, if you like, which are interrelated. We also talked about this pernicious positive feedback between poverty and hunger and nutrition, and how one can reinforce the other. And we also talked about smallholder farmers and how they are, kind of paradoxically one might say, they are the ones who produce the food, but they are also the first to suffer the impacts of food insecurity if and when it does come. So what I would like to do then is to, maybe reflecting on that, actually think about what are the investment needs and the working capital needs that arise from food security. What sorts of investment needs are we talking about here? And then to move on to how can those needs be met and who can meet them. We can think about, seasonal working capital. We can think about loans for equipment and machinery. We can think about financing of storage facilities, grain silos, maintaining the cold chain and the different investments that are required there in terms of logistics for cold chain maintenance. We can think about longer-term financing for processing, packing facilities, and land purchase indeed. And we can also think about the financing needs around markets and access to those markets. Roads, obviously, but also the facilities at the market, the quality of the facilities, and other infrastructure, local storage around all of these things. Now, many of those financing needs can be observed at smallholder level. Others might be more at the level of cooperatives or municipalities, and others again could be the responsibility of the regional government or indeed the national Department of Agriculture, whoever that might be. So a spectrum of different financing needs, a spectrum of different clients, if you like, who have those different financing needs. And in this session, we'll talk about how microfinance is already meeting some of those needs, how it can go a bit further towards meeting more of them, and where the limits are as well, because also, I think we all say it in most of the sessions, it's not a panacea, Then, without further ado, let me introduce you to our panelists this afternoon. First of all, to my left, we have Mr. Fabian Kasi. Mr. Kasi is the Managing Director of Centenary Bank in Uganda. Centenary is one of East Africa's largest agricultural lenders. He's an accountant by training, having studied at Makerere University and the University of Newcastle in Australia, I understand. He joined Centenary Rural Development Bank from Feehan, Uganda, where he had served as country director until 2010. Sir, it is a real pleasure to welcome you to the panel this afternoon, and indeed to Luxembourg. I understand it's your first visit to rainy Luxembourg, so you're very welcome, and we're delighted to have you on the panel. So not the last, not the last, not the last, indeed. So welcome to the panel, Mr. Kasi.
Thank you.
Then to my right, we have Dr. Birgit Galemann. And you really do have two quite distinct chapters in your career, Birgit, don't you? First of all, some 13 years of experience in international finance, working for Deutsche Bank in its financial hubs in New York, London, and Frankfurt, with a particular focus on the market and credit risk management. But then since 1994, you've served as an advisor to microfinance institutions in rural Uganda, developing tailor-made performance and strategic planning materials. And then since 2007, she struck out and became an independent consultant in financial systems management with a focus on Africa and on Indonesia. So welcome, Birgit. We're delighted to have you on the panel today. And then further to my right, Dörte Weidig. Dörte, since completing your master's program in international finance, you've been fascinated by development finance and by that large question, what mechanisms and what institutions are best suited to finance growth and development in sustainable ways? That big question, which I think you've been answering for different parts of the world, for different situations, through your career. Your professional journey immersed you in financial inclusion. Dörte has managed SME banks, including the ProCredit banks in Haiti and Serbia, and now as a managing partner of IPC, she advises numerous financial institutions, including ourselves in EIB, I should say, on how to manage micro and SMEs with a special focus on chronically underfinanced sectors such as agriculture, renewable energy, and also education. Dörte oversees IPC's work in Sub-Saharan Africa, Latin America and Caribbean, and also North Africa. It's a lot of traveling. And you have a particular interest in climate action and the green transition. We're very fortunate to have your insights and your knowledgeable perspectives on the panel today. Welcome to you, Dörte. Welcome to all the panelists. So what we're going to do is we're going to move through a conversation, if you like, with a couple of questions, which I'll address to all of the panelists. And we're also very conscious that, you know, you all, dear audience, you all had several other panels that you could have chosen this afternoon, but you're here in this panel, and you're all here for a reason. Maybe you're working, you're working in the region, or you have a particular interest in that region of Africa, or in this subject in East Africa. So we want to make sure that you have the opportunity to raise the questions or the comments that you want to raise. So we will make sure to make time for that. So first of all, then, let's then characterize the problem, if you like. What are the concrete issues regarding food security in East Africa? Dörte, would you like to take that one? Thank you.
Yes, I can. So I believe, I mean, the whole panel is about the perspective of microfinance and microfinance institutions, right? So I'm not going to repeat or try to repeat what Maika has presented on her panel. Thank you so much for all these insights. That was basically the perfect prep for us here. So when I take then the perspective of rather a microfinance institution, I think the most prominent fact is that East Africa, beyond 2, is just not enough food produced. And we all know why it is so difficult to produce the food. I don't think we need to go in this circle here in the reasons, but it's a fact that not enough is produced, and it is hard to produce. And we also know the food that is being produced, it is very hard to get to markets. We also know why, but it's a fact, right? And I believe, you know, yeah, the sum of these facts, yeah, show also that it's very hard for most of primary producers in East Africa to have a business case in primary production. Yeah. And this missing business case of primary production for many, if not most producers, I believe is exactly the issue for microfinance. It is particularly difficult to finance a primary producer if the primary producer doesn't have this business case. So micro-lending, mostly, other products a bit easier, but especially lending gets especially hard. And that is how I would describe the situation or perspective of a microfinance institution when it comes to helping to increase food security. Yeah, we can't just get there easily.
Thank you, Dörte. Birgit, would you like to add to that and to elaborate on that point, so that the concrete issues that we're tackling today? Thank you.
Yeah. We all know that we have several well-known conflicts that we have in East Africa, especially we have the largest, the region with the largest refugee camps. We have conflicts. This doesn't help in getting food and having it sustainable. All the time the people are moving. That is one thing, and the other thing we all know is this climate change, we always say, but it's the climate variability. We do not know when it really rains. We are planting, but then it doesn't rain, then it all is lost. If we don't have irrigation systems, unless we start now with solar energy, which is already done. It's the variability, then we have the pests, the diseases. But I always want not just say about the challenges, but also for the solutions, what is there, what I think we have to do is, and what is being done, I have concrete examples, is we go in we all know, value chain, where we need to connect the smallholder farmers with the institutes who research for climate-resistant crops. A lot of work is done in all the countries. In Uganda, we have Makerere University. And then we take, as a third stakeholder, we need, and then we have the financial institutions like Centenary Bank. If those link, we have it all, from the bottom to the finance. If we research for nutritional, it's too important, nutritional crops, climate-resistant crops, and crops which serve the soil. The example of the soya bean is where the soil is even fertilized through the bean. I have seen it already in Ethiopia, but now I see it also in Uganda. Maybe that's enough for the moment.
Thank you, Birgit. Indeed, this panel is very much about the solutions, the concrete solutions. And you mentioned Centenary Bank, so over to you, Fabian, if you'd like to share your perspective on this point. Thank you.
Well, thank you, Jane, and thank you, ladies and gentlemen. Good afternoon. We are talking about food security with regard to what financial institutions have to do and the factors that affect this particular aspect. When you look at East Africa, where I've worked, for some time now, you find that one of the key things is that most people are involved in subsistence farming. And in order to produce enough, there's a need to go commercial. And when you look around, I don't think we have enough facilitation or support, to these, farmers to be able to produce as much as possible. And even when they produce, the little they produce, to ensure that the produce is properly handled, post-harvest and so on, there are still impediments, there are still issues. You also find that because, they use labor, manual labor, there has been the phenomenon of rural-urban migration, meaning that, the supply of labor to be able to produce enough is quite still an issue. And I believe these are some of the factors that affect food security. And of course, when financial institutions have to intervene, there's quite a lot that they need to do, to ensure that those gaps are closed.
Okay, thank you. So not enough food is produced, as you said, Dörte, but then what is produced? The challenges around post-harvest losses are considerable. Challenges in identifying the right labor, meeting labor needs, and then integrating research into agricultural improvements. So all of these challenges. So how then can financial institutions and financial institutions on the one hand, and those who produce the food on the other hand, be better connected? Because we have those who produce food and who have unmet needs for finance, and then we have financial service providers who are looking for clients and looking to grow their client base. How can we better connect these two? The matchmaking. Over to you, Dörte.
Yeah, the matchmaking. It's a challenge. And again, here I take the perspective, oftentimes we are being invited to work with a financial institution to get the institution closer to the agricultural sector. Can you hear me well? Yeah. To engage with the agricultural sector and eventually build or expand an agricultural loan portfolio. And what definitely has never worked is that we come with a pre-defined concept and try to impose it to this financial institution. So what I'm saying is that what we usually do is we look at the agricultural sector, and you all have it in front of you. We talk about basically a pyramid with subsistence farming, primary production at the bottom of the pyramid, but here also you have the high numbers of actors. And then you go up the value chains, and the number of actors gets smaller and smaller and smaller, up to the top where you have potentially the commodity exporters. So having this in mind, what we usually do, we sit with the financial institution and try to understand basically their very genuine basic strategy. Not the strategy when it comes to agriculture, but where does this institution come from? Is it mostly urban? Is it mostly about working capital? Is it mostly about corporates, which is not necessarily applicable for microfinance? However, whatever financial institution we work with, this is what we try to understand, because what we have learned is you better, sit with this institution where the institution is, and then you leverage what is already there. And if it is only corporates, then you work first with corporate agricultural clients, and then you try to walk them out of their comfort zone, slowly but surely. But you try first, that the institution gets a comfort and feels comfortable with the agricultural sector, because you all know the arguments. Agriculture is so risky and cannot be mitigated. And of course it can, and it is risky, but there are mitigation instruments. So you pick the institution up where it is, and then you walk them, would say downstream, because of course we would all wish that they start, from the corporate to the SMEs to primary production. Yeah? So this is about segmentation, I believe, and it's about, following the financial institution where it is.
I liked your phrase there, leveraging what is already there. Yeah. Although that's one side of the equation, there's also the other side of the equation as well, and the training that goes on to encourage farmers to develop their business plans and present those at financial institutions and be able to better explain and justify their financing needs. But any of the two sides. Birgit, over to you on that one. How can financial institutions and those who produce the food be better connected? Yeah.
Yeah, picking up on what Dörte has said, to go to there, what is already on the ground. We have a concrete example here. I have one in mind in northern Uganda. I worked with them, a secondary agricultural cooperative. Secondary means as members it has primary agricultural cooperatives, so these are already hundreds of people in each one. And then these, so at the moment they are still growing, 11 primary cooperatives are the members of a secondary agricultural cooperative. This one is connected already to the big contract buyers. So you have the smallholder farmers down there really having 1 acre of land, producing something, bring their things to their primary cooperative. From there it's picked to the secondary, and the manager is negotiating early in time with the big contract buyers. And now comes what Dörte says, the financial institution, and we have a nice example. Here he's sitting, Centenary, entrusted a loan to this secondary agricultural cooperative in the north of Uganda. And so it entrusts a loan to do two things. I talked about research, climate-resistant crops. They connected the cooperative to the Makerere University, where Fabian studied, and they found out soya bean, quality declared seeds for a special type of soya bean, which is very nutritious and good for the soil. And this was introduced. Now the agricultural cooperative needed to build a warehouse. For that they needed the loan. And since these quality declared seeds are double expensive than what is usually other seeds are costing, they needed also part of the loan for buying the seeds. What they do is they bulk, so they collect the inputs the primary the members, the smallholder farmers need. They aggregate everything. Now how many tons later on in the produce, or how many, still tons, seeds they need to buy in advance. We need for that the liquidity from the financial service provider, give it to the farmers, they produce, then they bulk, so they collect everything to sell it to advantageous prices to the big contract buyers. So here is where we have the direct connection between financial institution and smallholder farmers. For that, they got entrusted the loan. That is this. And a second thing here is if some, not so much, TA comes in addition, then we have already in-house training. What I love so much, what they are doing, they have lead trainers in their primary cooperatives, the secondary. They picked them, And when they have learned something, they teach these primary lead trainers in the primary cooperatives. They forward, of course, their knowledge. And this in-house training sometimes needs some more inputs, and so they can give it. So they have in-house training, and the great thing is these people are all members from each other. They're mother cooperatives. They trust them. There is no NGO coming from outside and going away again. They trust them. So it is not easy to convince a farmer about a new crop, and then even if it's double price, the seeds. And it's not the staple food diet. And what I forgot to tell and then finish, they have not just 11 primary cooperatives as members, they have also 70 village saving and loan associations as members. These are the very, very down-to-earth people. These are the households, the mothers. And these mothers already now put in the staple food of their children, usually it's cassava for porridge, they put already the soya bean inside. So, and here you have this trust, and therefore it works. And these trainers, they don't go away. It's a sustainable thing. I think that's all I wanted to mention, and I talked about this. Yeah, there is one more thing, then I finish. If you have some TA, there is a lot to manage in data. Who has bought, got, and later on brought the produce from the smallholders all the way up to the secondary. They don't have computers even in the primary cooperatives, just on secondary level. And all these data need to be recorded and aggregated. For that, you need some simple tools. We talked in the other section about simple technology. And then you can manage and you can plan it in advance, and you can go to the big contract buyers and say, we will have so and so many tons of produce. What is the price we negotiate?
So this is a very interesting concrete example. Centenary Bank financing this large secondary agricultural cooperative in northern Uganda. Would you like to elaborate on that example within Centenary? Thank you, Fabian.
Well, I guess as we've learned, it is practically difficult to go down, as the doctor has elaborated, and be able to finance, all these smallholders, farmers. So the arrangement of having able to organize themselves in a cooperative, I think is a very effective way of supporting smallholder farmers. As the example has been given, we've found it work. And of course, the lessons we learn from it is that collaboration, first of all, and partnerships are very important because financial institutions are risk-averse. And these smallholder farmers are very risky. Going directly to finance them is practically not easy in most cases. But when they organize themselves the way they did, and the kind of example that was given, it became, easy to be able to support them because they are organized, and especially coupled with some support from other organizations. For example, in that case, we collaborated with an international agency, GIZ. We are now also collaborating with the EIB, European Investment Bank, to facilitate financing, to facilitate capacity building, thereby being able to create good impact to support these organizations. And it has proven successful, and I think it is a model that could be, cascaded or scaled up to be able to support as many of these small, farmer holders as possible.
It's an interesting and important concrete example. Yeah, indeed. Thank you for elaborating on that. Now, let's look at what's new in the field. What innovative approaches are available nowadays for agricultural financing such that financial institutions contribute to more sustainable agriculture and food security? So what's new today, 2023? Dörte, would you like to go first on that one? Le dernier cri.
Sometimes I feel I'm a little bit the party killer when it's about the question of innovation. Well, what I mean by this is, I think over the last 10 years, I think we have seen a lot of innovation in financial inclusion. And especially East Africa is home to a lot of innovation in terms of digitalization, fintech landscape, etc., etc. And I think this is great. It was great. I personally feel now we should maybe take the time and see the new innovation is to implement the innovations that have come up over the last 10 years. Maybe my view is a bit too narrow. Again, I look really at financial institutions. But honestly, I see very few financial institutions where all these innovations have been implemented successfully and sustainably. And I would wish, that was more the case. But we have seen innovation in insurance, in data distribution, information distribution, in guarantees, in warehouse receipts, etc. You name it, right? A lot of great concepts are out there. They have been piloted, but again, I think now it's maybe the time to take the time really to implement them. Because if you allow me 2 more minutes, Jane? Yeah, because I feel, when we work with financial institutions, and I hope Mr. Kasi would agree, the moment we sit with the teams, yeah, and at best, it's already an agricultural finance team, at best, yeah, but with the banks or the microfinance teams, we discuss very basic things. Yeah, we discuss very basic things like, is the institution able to do a seasonal loan product? Because that assumes that irregular payments are possible in their software. Oftentimes, that's a first obstacle. And it sounds very basic, but it's not. We discuss a lot about operational risks, yeah, because if you have an outreach like Centenary has, yeah, chapeau, but your operational risks are tremendous, right? So you look at processes again, you look at analysis tools, you look again at relatively basic things. Then there is a lot of discussion about digital, yeah, and digital channels and digital products potentially. But then what we discuss very often is the institution internally already to some extent automized, digitized? And oftentimes the answer is no. So what I want to say, really to leverage on these new concepts that are out there, I think, again, now I repeat myself, we should take the time, really more time to implement. Yeah? And I see you nodding, Fabian. I hope you mean it, but we have done this exercise together lately, and these were the topics we were discussing with your teams.
Yeah, indeed, what she's talking about is something that is already taking place. I just wanted to elaborate further on the issue of digitization as a driver of new things, being able to come up with products and services that are suitable, to be used by these small farmer holders. When you, for example, through, again, collaboration, we had to design a VSLA savings account. VSLAs, Village Savings and Loan Associations, they are small, basic village-based, organizations of people who, first of all, don't have the knowledge, they don't have financial, capacity, they are collecting, a few small coins, which they are saving from time to time, keeping them in a box somewhere in somebody's home, being able to digitize and come up with a product whereby they can easily save using their mobile phones, with all the controls. She talked about assessing and ensuring that you've covered the control, elements that should ensure safety of those small monies that they are saving. This is the kind of thing that took place. We now have a savings account for these rural-based, village associations of especially ladies, and they are able to quickly, seamlessly do savings, small monies, but eventually at the end of the day being able to come up with, good savings that can support them and even, be able to make them access funding from financial institutions. So digitization, yeah, I think it is something that can be used to be able to come up with a new and good, way of serving these people.
And indeed, that product is a very interesting one. These special savings accounts for village savings and loan associations. And Birgit, you have a special insight into this as well. So you might want to elaborate on that. I don't want to undermine, though, the very important point that we need fewer of the light bulb moments and more of the actual rollout of the innovations we've had in the last 10 years. I think we do need to lock in that conclusion. But having said that, this particular new product is worth focusing on a little more and elaborating on a little more. It's an interesting one, please.
Yeah, I'm delighted to talk about my heart project. In Uganda, already 10 years ago, I started with the local people as a movement, the Catholic Workers Movement. We started together, they and me, to build up what we all know, saving and loan associations, of course, with a methodology where we changed a bit. And then they said to me, we know this kind of methodology, the cash box, as Fabian said, is not safe, can be stolen. Okay, I said, what do we do? And they said, we need to put a limit on the money which is not lent out from the saving and loan association to the members. We need to bring it to a bank. Okay, I said, that means we need from the beginning on to negotiate with the bank where it's safe, so that they give us accounts. And this is how it started. Me as a German, I'm used to free of maintenance charge saving accounts. And I said, let us negotiate with the Bank of Uganda, the Bank of the Church in Uganda, and that is Centenary, and we negotiated, and yes, they finally bought into our ideas because we argued we get funds deep in the village you can never get because it's much too costly for you to go so deep into the village. And so finally, it took some time. Technology has always to come. The system, I know it from my own work at Deutsche Bank. Finally, they developed this zero maintenance free, cost-free savings account just for village saving and loan associations. It's for all over Uganda, not just the Catholic Workers Movement. And we have built a countrywide network, and it's still growing. And we have a committed person still in the head office of Centenary. If we have a problem, or they now, with the branch, a local branch in a diocese, in a region, then we connect them to this very nice lady, and she tells them what is the deal about. And I want again to connect to the agriculture. So these people, these are the households, they also have, like each one in Uganda has at least 1 acre of land. And of course, what do? This is smallholding, farming. They also produce, yeah, they have a lot business, not trading, but also in agriculture. And I talked about the 70 VSLAs being members of this secondary agricultural cooperative. So it all comes together.
Now, at this point, we could continue our conversation, but we've got plenty of time. I think it would be good to throw it open to yourselves, ladies and gentlemen, if there are questions you'd like to raise. Now, do we need a microphone? We have a microphone. Thank you. We do. Thanks.
Hello, everyone. My name is Arthur Stetteberg. I'm the CEO of Able Nordic. I have a question maybe to the whole panel about the past, because it seems to me relevant to learn from what has happened previously in order to be more successful going forward. And as you know, financial markets are very prone to fashion trends. And this is a little anecdotal, but I remember that I believe it was 5-6 years ago, it was all the rage to invest in African agriculture. And I remember that the magazine Africa Report, I think they counted all the plans from private equity players, etc. And their plans at the time was to invest, I believe it was 52 or maybe 56 billion US dollars in African agriculture. I don't think much of that materialized. So what made them shy away?
Shall we tackle that one now, or shall I gather a few more questions? Let's talk about that question. Thank you. Interesting question. So lessons from the past. Who would like to go first on that interesting question? Thank you.
Well, I guess, first of all, we need to understand the markets. We need to understand the customers, the clients, the terrain under which they operate. And I believe probably in the past there were not a good efforts for whoever wanted to invest in that area to be able to study and understand and do research so that you are able to apply whatever solutions you want to apply, well knowing what's going on. I'll tell you that my bank currently has a loan portfolio of about $1 billion US, but 18% of that portfolio goes to agriculture, and it is performing. And how it comes about is by way of investing in systems of researching, systems of understanding what the customers do, so that you are able to design products and services that can ably, be applied to those needs. So we need time. We need to appreciate, we need to understand, we need to study, we need to, be able to approach, solutions when we are well aware of what's going on. Otherwise, if it is a question of stepping in and you feel you can very quickly make a decision whether it works or not, in most cases, you'll get it wrong.
At the risk of overstepping the bounds of my role as moderator, I'd like a bite at that one as well. There's also there's the issue that some financing institutions have, constraints around minimum ticket size, and there can sometimes be a pressure to find ways of increasing the loan amount so that it can happen at all. And that might be a factor at play in some of the financing which has gone on in the past, that there is this pressure. Sometimes certain institutions aren't able to handle smaller ticket sizes that are more appropriate for the investment needs in a particular situation, for what it's worth. Ladies, would you like to add to that as well? Or, yeah. And then please prepare other questions. Yeah. Okay.
May I? Yeah, I just have a number of reactions on the question, because somehow, yes, I don't know whether you speak a bit out of frustration. I do, because I think one would have wished to see more investment. I believe a number of financial institutions have built up sizable portfolios, and that's probably on the positive side. Centenary is probably an example to it. Direct investments, we have seen over the last 10, maybe 20 years, a good number of initiatives. My observation, and it's oftentimes that you don't go to sub-Saharan Africa and you see face value and opportunity and you invest and you do a return. I think oftentimes the transaction costs are widely underestimated. The funds going in have not planned for this level of transaction costs. Yeah. And also my observation is oftentimes that it's in the nature of things, not blaming whatsoever, but funds come oftentimes in with eligibility criteria that are just not fitting well to the environment in sub-Saharan Africa. Yeah, not judgmental. I mean, I know why they are there, but I think this prevents a lot of investment. But I saw other reactions, sorry, but this is...
Yeah. Do you want to react to that? I'm sure that question is coming from your personal experience.
This is not born out of frustration.
Yeah.
Just an observation, and that these big plans rarely materialize. And I believe there must be some reasons, as you alluded to, for that.
Okay. I think another, if I may, but it's... we debate this question oftentimes. There's just one other element I would like to add. In countries where we see big agricultural investments taking place and functioning, you see also that ecosystems are functioning relatively well, and usually you see a great deal of subsidies coming in on different levels. Yeah? So if this is not there, plus the transaction costs, I think it is very hard for an investor with the best intentions really afterwards to make this investment. So.
And I do add one little thing also. I believe so much in this in-house training, yeah? Not, as Dörte already mentioned, not pushing from outside, but letting it being built up as theirs. It's theirs. With our Catholic Workers Saving and Loan Association, it's their baby. They don't let it go. Since long years they do on their own. I just get here and there some news from them. And same with this, what I explained about the secondary agricultural cooperative. It's their thing. It's not coming from outside. And I would wish that more is invested in these kind of bottom-up approaches.
Sir, you had a question.
Thank you. I'm Pranav Prasad from the International Labour Organization, Social Finance. So a big thanks to the panel for highlighting some of these things. But one of the repeated themes that kept coming up was de-risking of agriculture. Agriculture is risky to invest and put it in. So I'm wondering, what are the panel's views on using insurance as a facilitator? Insurance as a facilitator, not just for the protection, but also the productive aspects of insurance. Can insurance be a facilitator to unlock some of the credit that people are keen to provide, but not being providing, and so on and so forth? Because I'm slightly disappointed by the total absence of insurance discussion yet that has happened. So I'd welcome some views from the panel on that, because we've been driving a lot of this work in Uganda and in various other parts of sub-Saharan Africa. So thank you.
Well, thank you very much. The issue of insurance, Greek insurance, is a very interesting one, and it has always been spoken about quite often. And potentially, you know, theoretically, it can be a solution, and everybody thinks yes. Unfortunately, first of all, it is costly. You know, if you are to go into it, it is an added cost to the customers, to the clients. And sometimes, especially with regard to the climatic changes, you know, things sometimes become too much such that even the insurance companies can't handle. And that has made it kind of unpopular. Otherwise, ideally, can be a solution, you know, to de-risk, you know, agriculture when financial institutions are dealing or are lending to these enterprises. And maybe also, you know, the historical perspective. When you look at, for example, my country where we operate, insurance hasn't been looked at as a very, you know, responsive, you know, mechanism, because so many times when insurable events occur, you know, there will be all sorts of, you know, for them not to pay. They are just now trying to change that, you know, perspective. But people haven't been looking at them, you know, very kindly as institutions that would pay. And in the process, you know, it has kind of not gained the kind of traction it should be able to have. Otherwise, theoretically, it can be a solution.
And let me just add, it is very difficult also for the local people to understand the whole concept of insurance. I pay for something which I don't get in case the event is not there. And if the event comes into play, then the measurement, if it really applies. How often are we ourselves disappointed when something breaks in our house and the insurance is not paying? And here it's even more difficult to understand.
Do you want to react to that? Absolutely do. We have the time.
Yeah. No, what you are talking about has already happened in Uganda. The insurance companies came together. They formed an agri insurance consortium. But still, it hasn't caught up. And generally, when you look at the penetration rate for insurance, is less than 1% in a community like ours, meaning that there is still a long way to go for the insurance companies, first of all, to do the education for people to understand and appreciate the usefulness of these tools before they can take them up. Well, it is growing, but probably not at the rate at which it should be growing, but hopefully with the time, people should be able to understand and take it up.
Now we have 5 minutes left, and it would be great to use that to have this, bigger conversation with you, ladies and gentlemen. I see two, maybe three questions. Let's take two of you together. Take
Mine is very quick. It's just an add-on to what was said.
Oh, right.
We
okay,
did
please.
a research in Ethiopia some years ago on the understanding and appreciation of index-based insurance, maybe appreciating the consequence. I mean, because of the cost, there was some hesitation, but they fully understood the logics behind the contract. So I think this is encouraging. I mean, there is not a barrier in that. Once you explain very well, they understand perfectly what it is. Sometimes the problem is that they don't have enough cash or enough income to devote such a large amount to insurance when they have several other needs, emergencies. Okay. But I think we have to work on this because it could be one instrument to, potentiate the access to finance also.
Thank you for sharing that insight, indeed, in Ethiopia. Would you like to ask your question? Thank you.
Thank you. My name is Claudia Huber. I'm a consultant. I'm curious. I would like to link back to what is in the title there, food security. We're talking a lot about financing agriculture, and I think sometimes in our minds we think about cash crops, and when we think about food security, there's the food crops, and I think it's even more difficult to finance food crops, at least from my experience. Whenever we have positive examples about partnerships, about things that work out, it often is cash crops. So I wonder if any of the panelists has experience on financing successfully food crops.
Okay, so food crops versus cash crops. Who'd like to tackle that one, Fabian?
Well, of course, when we talk about food security, it means people have to grow food crops. But of course, the key thing is how do we ensure, because not everybody is going to grow food. There are a few people who grow the food, and that food has to reach places, where there's no food. First of all, production supply has to be to a level whereby somebody can have something to eat, and the surplus to be able to sell, because he has to sell it to somebody. And being able to increase the supply or the production, there has to be support mechanisms. And that's where financing comes in. How are these people supported financially, capacity-wise, for them to understand how to grow, productively, and also to be able to preserve what they've grown and be able to transport it or transfer to a place of deficiency. And I guess that's why we are, talking about financing quite a lot, because it is a key support mechanism to be able to ensure that everybody has food and there is food security.
Claudia, honestly, the examples I have seen with successful food crop financing are not in the area. You cannot do contract farming. You don't do, the commodity trader or exporter is coming in and trickling down funding. You're down to basic microfinance, agricultural lending. It's about, knowing the client, doing the analysis, and accompanying the client with the right products. And here I feel the biggest obstacle is the obstacles microfinance institutions have in scaling in general, but also, again, the enabling environment, because it's exactly what Fabian says. I mean, you finance, there is production, and then the commercialization is a problem, right? But this is nothing the microfinance institution can ever solve, right? So here the partnerships and the enabling environment comes into place. I have not seen any quick fixes or super schemes that have solved this challenge differently.
maybe I have misunderstood, but I have again to come to my example of the secondary agriculture cooperative. In the data they have delivered, we had also one column where we said, these are they produce, for example, a lot of rice also. And the rice is eaten, I have eaten it myself. So they take out for themselves, and if they have 2-3 acres, the farmers, then they have surplus, as Fabian says. And this one goes then through the cooperatives, the secondary, to the big contract buyers. So it's food and crop and cash. It's both.
Do you want to react to that? And then we're going to have to wrap up. Any more quick questions? Yes. Okay, final question, and then we're going to wrap up.
Reflection and question.
Right.
Coming from East Africa, when I was working in Mozambique and getting triggered a bit from the questions that were here about the insurance. More we understand, I think, in microfinance. I was going deep in the villages, and this village and saving credit, village and saving our groups, they have been there before microfinance and banking system. I didn't understood. The way you understand how they work, for them, insurance is the saving. They always have one box that is saving. When you want to grant loan to them, you say, let's keep that saving, that whenever you have a disaster, you are sick, you have children sick, they go to that box. But often in microfinance, you have people that we don't understand how these groups work, and then how the secondary, because you have to have also individual lending mechanism, or like SME, or like those big cooperatives, but also this group lending. And there are very few microfinance institutions that might have both of this methodology of lending. Once you have this mechanism, meaning people, and then you can digitize or whatever, in the end it's much easier. But still it goes back to the people, to the knowledge, to the people that work in the microfinance sector also. So that technical assistance that brings that knowledge back, or use the people in that cooperative to act as train of trainers, that can help much more growing, let's say, the access, or giving access to the people, let's say, in different stages, levels, be it the first cooperative or that village, or be that SME, or be the big one top in the value chain, let's say. But that's not something that exists there, let's say. There are some examples, but very few, where you find also group and individual lending together in the same in the same institution, let's say, be it microfinance or rural banking, from my perspective. And yes, it's difficult in Uganda, in Kenya, and in Mozambique to sell any insurance, let's say, like this. It's needed a lot of work, not impossible. But they understand the insurance, because they have a saving box under the tree that they send now to the bank.
Thank you for sharing that comment. And indeed, we can certainly say that insurance means different things to different people. That's for sure. But there is a wider conversation to be had there. I think it's quite maybe good to conclude on that point, that there's the finance per se, but there's also the outreach and the technical assistance, and how valuable that can be when it is coupled correctly with the right financial support, and how powerful the two can be together. I'd like to very sincerely thank our panelists, Dörte Weidig, Birgit Galemann and Fabian Kasi. Thank you very much indeed. And to our audience, thank you for sharing your experience. Thank you for being here, and thank you also for those joining us online. And with that, we conclude the session. Thank you all.